Welcome to Case Study Series in Operations Management Case Study by skilled MBA EdenFarm, a Jakarta-based business-to-business Agritech startup, transformed Indonesia's fragmented agricultural market by revolutionizing farm-to-business food distribution. The COVID-19 pandemic necessitated a strategic pivot as investment dwindled and markets evolved. Despite post-pandemic growth, EdenFarm faces financial sustainability challenges, prompting a need for strategic reassessment. EdenFarm, a Jakarta-based, business-to-business Agritech startup, transformed Indonesia's fragmented agricultural market by revolutionizing farm-to-business food distribution. The COVID-19 pandemic necessitated a strategic pivot due to investment shortages and market shifts. Despite growth post-pandemic, EdenFarm faces financial sustainability challenges, requiring a strategic reassessment to ensure long-term viability. Indonesia's agricultural landscape is marked by a fragmented supply chain across over 17,000 islands. With 90% of farmers operating on less than 0.8 hectares, price volatility and multiple intermediaries reduce farmer income by 70%. These inefficiencies paved the way for EdenFarm's innovative approach to transform farm-to-business food distribution. EdenFarm partners with smallholder farmers, ensuring fair prices and consistent quality. They centralize distribution through warehouses and cold storage, optimizing aggregation and processing. Their last-mile delivery guarantees freshness and minimizes waste. A proprietary digital platform streamlines ordering, payment, and inventory management, enhancing efficiency and transparency in the supply chain. In 2018-2019, EdenFarm experienced a 250% annual growth, driven by a robust year-on-year revenue expansion. They secured approximately Rs85 crore in early-stage funding, bolstering their operations. With over 1,500 business-to-business customers, including hotels, restaurants, and catering businesses, EdenFarm established a strong foothold in the market, setting the stage for future challenges. In the first quarter of 2020, fundraising efforts were disrupted as investor confidence waned. By the second quarter, revenue plummeted 80% due to widespread closures in hospitality. To endure, the sales team was halved. By the third quarter, a strategic pivot to wet markets was executed, leveraging one of the few operational channels during the pandemic. EdenFarm demonstrated strategic agility by pivoting from hospitality to wet markets. They identified wet markets as resilient, retrained their sales team for this new segment, and modified product offerings to suit vendors. Additionally, they developed logistics solutions for high-frequency, smaller deliveries, ensuring continued operations during the lockdown. EdenFarm's post-pandemic recovery was marked by strategic expansion into Semarang and Surabaya, leading to substantial customer acquisition. This growth, while impressive, was accompanied by financial challenges, highlighting the need for a balanced approach between expansion and financial sustainability. EdenFarm faced a $10.6 million annual loss in 2022 with a $12 million burn rate, raising concerns about long-term sustainability. The company had an 18-month runway before needing additional funding. These financial pressures necessitated a strategic reassessment as investors shifted their focus from growth to profitability. CEO David Gunawan faces a strategic dilemma. Option 1 involves pausing expansion to focus on profitability, streamlining operations, and achieving cash flow positivity within 12 months. Option 2 suggests a balanced approach, continuing measured expansion, implementing operational efficiencies, and exploring new revenue streams while balancing growth with sustainability metrics. The explorer's dilemma highlights the need for startups to balance exploration and exploitation. Exploration involves seeking new opportunities and markets, while exploitation focuses on optimizing existing operations. Achieving ambidexterity, or balancing innovation with execution, is crucial for resource-constrained startups to thrive in competitive environments. Zomato achieved profitability by exiting non-performing markets, optimizing delivery logistics, and diversifying revenue streams. Big basket balanced growth with efficiency using a hub-and-spoke distribution model, a private label strategy to enhance margins, and a tiered market approach based on profitability. These strategies offer valuable lessons for startups aiming to balance exploration and exploitation effectively. Implement city-level profitability analysis to make informed investment decisions. Adopt a tiered expansion model, categorizing markets into cash cows for profit and growth stars for scale. Develop value-added services like inventory management software and financial services to enhance vendor and farmer offerings, boosting margins and market presence. Strategic agility is crucial for navigating market disruptions, ensuring adaptability and resilience. The outdated growth at all costs mindset is being replaced by sustainable strategies. Balancing exploration with exploitation fosters a lasting competitive edge. Moreover, financial discipline is vital, complementing innovation to secure long-term success. These lessons are pivotal for future leaders aiming to thrive in dynamic environments. Thank you, and for further insights on strategic agility and financial discipline, connect with Skilled MBA. Explore our case studies on scaling under uncertainty. Reach us at +91 87553 00795 or support skilledmba.com. Visit https://skilledmba.com for more resources.